I have some day that didn't make a video, but this starting August, we all see a high volatility or an increase of volatility based on the market behavior that we have right now. A lot of, let's say, sensibility with what is really happening in the market, right? External market in U.S. So it increases the volatility in the day to day, in the day intraday. So starting August the 1st, we'll see huge bars in the 5 minute chart, but also um, even two times the range that we used to have in the daily chart, right? So what we can do in that. So this trade is about what are the options that we have in terms of trading strategy, in terms of risk management, to try to figure out what is the best approach. Always is going to depend on your strategy. Of course, each one of us has a different strategy. Some of us can protect the capital, as I would like to always do, but also some of other people can assume the risk and increase your financial risk to adapt to the new situation. But the essentially is that we all need to change our strategy or adjust it what the market is really demanding. And this video is about that. It's about how we can do that. What are the options that we have? Hope you like it, and please let me know your comments about this. And don't forget to click the like button. Thank you very much for your attention. Yeah, we see clearly here, in the transition for the month of July for August. Really, what the market did in terms of increasing volatility just one day. This day was really a surprise for me. We never expect that, right? So, but this first leg here is really something that is not normal. This is something that doesn't happen. You can see we have here 14 consecutive bars. Bear bars. Probably, it's a strong micro channel, bear micro channel. But previously we had a data of 60 points, and then we goes to a data of 156. This is we just know at the end of the day, right? But then, with this micro channel here going below, testing, in a climax in 16, the low of yesterday, can say, well, this is a second leg down, obviously, right? So what we can do here. So first of all, we know, we buy the bar one, and we goes to the 101, and we got the 101, right? So that's normal here. So with this here, you can trade normal as you has been trading, right? You have here a good scalp of 12 point. That's normal, okay? But then you have L2 here in 7, okay? And then that 7 has, again, 18 points stop. Or we can say that you can put a stop here. But the good thing is that is failing in this high, the height of yesterday, right? So that's the true thing. So taking that 7 makes totally sense, even using that 6, 15 points, but we see here 15 points stop. So here we can sell that one and we'll fine. We can sell this 1.7, we'll be fine. No issue so far. So we can, I think that is normal. This is a high probability trade to close this gap here, so we can get this one. But then you have this trading range here, so it's really hard to get any trades below here until you have this test here, this low. And then you realize this low here. You have this low, but you also have the low yesterday here, right? So strong micro channel, tight channel, very tight channel. There's no way to sell here, here. I don't feel comfortable selling here because we see to the left. We're coming from a kind of, it's a wedge, of course, but it could be just two legs down and that's it. So it's really uncomfortable here. So this should be trades of, you're gonna get the 10, for example, it's a stop above that 10. You're gonna sell the 12, it's a stop above the 12 or above 11. So it's so low. We can have a test of 1, for example, and came back. So it's better to wait for the pullback and then sell. Then inside bar, then you can sell 18, of course. Looking for the second leg. But this, I will miss all this stuff eventually and selling here. When you sell there, you just, this bar stop because this is an EE pattern. So we it fails up, it's gonna probably make a more deeper pullback. So this is a good, probably the best trade of the week, maybe, right? This one. And then you see that you have this 19 and then an L1 in 24. So you're gonna sell 24. The stop is the flag. Again, $12. Still makes sense, this stop. L1, L2, 34. You sell 34. Stop, bar stop, or you can put the stop here eventually. But you sell that, will be a little bit more 10-point stop. So also it's good. You're gonna sell this one 57, right? This is more tricky because it's close the low or 38, but then you need to trade small here. And then it's more tricky here, 42, for example. You get 42, your stop needs to be here. It's an L1, L2, this is an L2. Okay, you can add for a correct position that you might have and then exit above that bar. Okay, if this didn't work, for example, if this, but eventually if this didn't work, it's gonna go there and you're gonna lose your trade. And then if you see here, to trade here, you need to have huge stop. Let's see that you get this 46, it's 20-point stop. So a small trade here. This inside, outside, inside, you sell below, you can put your stop above that outside bar, above that. Here. And you'll be fine, but you need to exit quickly, especially with this outside. So you need to exit quickly. If you buy this, I did buy this 53, unfortunately. You need to get, I remember clearly that one because I hold 14 points, which makes sense still, right? But it didn't get one of that bar, right? And then if you sell the 55, that makes sense too because it's a 20 GB. It's a 20 GB setup. Then your stop is 12 points. So those 14 points, 12 points, 20 points, 12 points, those are out of my standard stop. That is top 10 points. This 15 points is also out of my stop. So my strategy was to try to trade with micros in this case. Okay. But of course, you can say that this 37 is a high probability trade, so you can accept this risk based on the high probability. This 24 is high probability trade too, so you can accept based on the high probability. The 55 not so much, so but this 56 giving the 55 follow through is a high probability trade. It's 16 points, so you can assume it, right? And that's it. So if you get this 68 in the long, for example, your stop needs to be, and this is a low probability trade, it's about 15 points or so. So it doesn't get into my it's 10.75, so it's could be a good trade for me. So this start the ranges of high risk based on the high volatility that we have starting this day. Okay. And then we can see here that the bars starting to be 15 points, 15 points, 14 points, 13 points when it's coming from bars of 12. We keep it probably in the same level. We see here we have bar of 14, so it still is high volatility in terms of the range there, but not in terms of the size of the bar. Okay. Here is the different stuff. You see bars again within the range. Okay. In the day. So we have a huge gap and then flag here in bar 5 is a more high probability trade. It's a flow through and we have 23 points. Right. So these 23 points, it requires that you can sell this 5 with a lower with small size or micros, right? Or you can assume that this is a high probability trade and then assume this risk with your same financial risk, basically that. For example, my financial risk is 10 points, so if I enter there, I'll assume I'll take this high probability trade and just put my stop 10 points away, something like that. Let me tell you. But then you need to have the ability. This is 53994. 5 4 here, something like here. Look at this. So this is my normal financial risk, right? And then I'll need to assume this, and you see that it could be something that could go here, swing me, and continue going down. But just if you get these 3 bars, bare bars, you can say, well, this is a high probability trade to get 101 of these 10 points here. But also you can say, well, I can make this and looking for this. So it's the risk that you're gonna taking. You can do this too, looking for this exhaustion bar down. That's 2 ways to do it, but this is too risky. So you might if you are tightening your stop 10 points, you are reducing your edge. What is your edge? It's basically, it's a high probability trade to go here before making one-on-one, right? So, but if you are putting just 10 points here, then you're reducing your probability, and you are having a trade that goes the one-on-one here, and even it can make some pullbacks here and exiting here and goes there eventually. So that's the issue, the trade-off that you need to see. Of course, if you are trading, if you're using micros, you can reduce by half, for example, as I did. Instead of trading one ES with 10 points, trading five with 20 points, I put my stop here. It's something that is better than just miss the edge of this high probability trade, for example. When we have this spike here, and then we can say that, well, it's channel that's coming, right? So, and that's the dangers here. So, for example, if you sell 10, I don't think we will wait after these two bars, a better entry. But if you sell 13, for example, you're looking for second leg down, then, right? It goes there, but didn't get the second leg down. Then you say, well, have all these, even here, there's a potential pullback, from here to here. So we're talking about 39 points or so. Yeah, 29 points. So this is not feasible. That's my point. Or you try to stop here and you exit with 12 points, which is also doesn't make sense. Or you put your stop here above here. That's the issue with these trades. If you see this L2 here in 17, it's pretty much 40 points. Come on, it's 39 points, 40 points. So there's no edge here in terms of risk management. Of course, if you see 17, this is a good bar. You still needs to have 15 points stop. And then you have the moving average here. So it could goes up after this 16. So it's tricky. It's tricky. So you can, here in this situation, it's better to trade small with micros, of course. Then you have a wedge here. Right. You have a wedge here and double bottom with a 22 excellent 23. It's good for, it's 12 points. So this bar, you can take it with the S even, right? I'm looking for the 2 legs up here, or 3 legs up, basically that. But you're gonna take 25, for example. It needs to be with macros because it goes to 15 points already. So it's not good risk here. We can have a double bottom here and then goes up again. Okay, so that's basically how the volatility affects us in terms of how to take decision. For example, this 39 is a wedge. Beautiful wedge, perfect wedge here, top. And then this 39 is a signal bar, right? So we see 39 is a good bar. It increases the possibility to have 2 legs down after a wedge, right? Testing here, which is we made, right? So pull back. We didn't get the 2 legs down, but it's a good. And then a wedge here, beautiful. This bar. So we get this 39, for example, 14 points. Still, we can accept that risk using ES, right? Because we have a good edge of the wedge. We came from this pullback, this strong spike, bear spike, and then we can say, well, we're still waiting for the second leg down, right? So even we can say the high probability is just to get this 101 before hitting the stop. So 14 points scalp, which is paid, right? It's paid. This 45 is better because we have IOI and then looking for the second leg down, which is good. So it's easy. We can trade this with ES. But then this 58, that is a wash, it is about 19 points or so, 13 points, 13 points. Yeah, which is also we can take it with ES. Of course, I will enter here in the 57. That will be my entry, but this is the most high probability trade. So here you have more probability to make 101 of that bar. And we see here clearly we get those 101 there. Okay, those 13 points there. Then another wedge here, 1, 2, 3, clearly and perfect. And this 68 could be the signal bar. Good trade here on 20 points. Yes, good works too. Of course, accepting or taking this bar that is more high probability. This bar, we can take it, 9.75 is entry, is getting to my management. But yeah, good works. It's a wedgeable flag to get the two legs up here. So that's basically what's happening in that day, how we can trade that day. But look at this day, and this is tricky. August 5, we goes to 30 points, and that's where the craziness started. 30 points, 30 points, 30 points, right here. So basically, we cannot trade with ES. Right? So it's really hard. So we have here a wedge. Right? 1, 2, 3. If you want to get this H1 here, for example, it's 33 points bar. And that's not the right stop. The stop should be here in 40 points bar. 40 point stop. So you need to trade 2 micros to get it this. Right? And let me see if we go the 101. We got 40 points up. We don't. But the 4, we got it. Okay? So that's basically the issue here. So wedge and 8 and then 11. 8. If we took 8, we can take 8 on the close. 35 points. 2 legs down and then 13. So we can take 13, right? Good bar, 25 points. 1, 2 legs up. 1, 2. We can say this is 1, this is 2, this is 3. Wedge, double top, failing, we can get 27. Signal bar, 23 points. That's the issue. 19, stop here, 25 points. 29, we cannot take 29 because we expect 2 legs down, but 31 we can take it with stop below, 23 points. So that's the issue, right? Basically, we'll need to figure out how to do it, right? For example, if you take this trending line and then you see 39, right? This is a wedge 2 FBO. You can take 37. It's 18 points. Or if you're gonna get the more better probability in 39, it's about at least 32 points stop. You see that? So we cannot trade this day with ES as we do, unless we can increase our financial risk in that sense to get 23 points, 35 points range, right? Or reduce our size, basically. Right? You are not used to reduce to increase your financial and expose more your capital. It's better to protect your capital and reduce your position size. So L2 here 51. That's entry. That's a good short for ES. Looking for 2 legs down. IOI. I'll exit, but 61 is a good flag too. Bar stop 9 points. I'll take that one. Wedge 64, 70, 76 on the day's ends. But this is a good wedge to take. Double bottom. And wedge. Beautiful. Perfect wedge. So I'll take that 77. The close. 8.75. So at the end of the day, volatility decreased, so we were able to trade with ES again. So start of the day, midday, we have high volatility, we trade small. Then in the afternoon, we can use ES as in the same strategy we had. And then we see the same thing here, right? So we see this day was a little bit more easy because we have 14 points average, so we'll be okay. So this bar 4 is a good IOI, so we can trade that one. Let me see the size. It's 21 points. We don't even make this with ES, right? And then spike 1, 2, or 1, 2, 3 legs up, wedge here, wedge top, and then this 20 will be a good short. This 20 is 15 points, right? So you're still thinking on this 24, it's about 14 points stop, so it's still good to take. And then this 37 is a breakout pullback, would be great to have it. Tricky stop here below 37, but it's okay. 1, 2, 3, and then 65. Look at this 65. This 65 is as the thing is that we need to have a strategy that we can switch on until 15 points trading with the ES and then trading with stop, right? Technical stop, trading with small sizes using micros. That's basically what the message I wanted to tell you. That is the best approach. Here, for example, same thing. 7 or 9. Stop needs to be here. 30 points, 13 points, so acceptable. Then 15 points acceptable. And 20, 21, this is a good reversal pattern here. 20, you can use 20 here with 11 points in this high would be great. 27 is more than 20 points, but you see that Your stop needs to be in 26, but you have the edge of having a good probability trade here. So you have the edge of this being first here instead of taking to stop. So for not losing your edge, you need to use 20-point stop. Okay. This 38, very nice 38. It's good stop too. 10-point stop, but you can use also this swing here, 12-point swing, and then you got all of this, even looking for closing this gap here. 51, 15 points, and could goes up because we are not so close the moving average. So it could goes here in 42 high, 20 points. That will be the most reasonable stop there. If you get 52, you stop at 50, but then you have the edge of more high probability trade, and then it's 28 points. You see, August the 8th, we have high volatility at the beginning of the day and then decreases when the day is going up. So same strategy, I think. This 5, for example, is huge. It's 27 points, makes good spike. This is very good, this 44, beautiful. So and that's it, guys. So my point is, if you have a standard strategy in terms of risk management, you starting August 1st, you really need to take a look on the strategy and define what is the best approach depending on the size of the bars. Again, coming back what Albrook says in terms of swings, we're looking for 20% of the days. In the days, at least for one swing, right? If the day is 100 points, we're looking for 20 points. 40% for a swing. So we're looking for 40 points. So your stop needs to be between the 15% and 20% of the day, basically of the ATR. So basically is that. So if you have a stop, you usually use 10 points because we have ATR of 5 points per bar, and now the ATR is the double. So we need to really modify your strategy using those elements of volatility. And then when you have 100 points average through range in the last 10 days, 122, we're looking for swings of 40 points, and we're looking for a ATR of more than 20 points or 15 points in each bar. So you will need 30 points stop basically to trade on ES, and that will be the more the standard stop that in case you want to expand your financial risk instead of reduce your goes to trade macros. That will be the best approach in terms of you have the capital for that. I'll prefer to protect my capital and then trade small in order to keep my financial risk as we were trading. So in that sense, I do prefer to expand my stop to 30 points using macros instead of using ES with 10 points. Okay. Let me know your comments. Let me know how you deal with this day. It's really important. Let me know your comments regarding this high volatility. How will you do, and how was your financial results during those really interesting days, right? Thank you very much, and don't forget to click the like button, and see you in the next video.